Hello traders, Corey Mitchell here with TradeThatSwing.com. We are going to look at how to scan for cup and handle patterns. We can also look for continuation patterns. Continuation patterns typically occur when a stock's really running away, and it would be, you could think of it as like an addition point if you had held the original breakout. Let's look at Collector's Universe here. This just happened to randomly be up here. But we had a bit of a handle here. We can see coming up into these highs, big breakout. So continuation patterns would be anytime we start to see another contraction, like another handle where the price could break out of, and that'd be like an addition point. If you had held that trade, maybe you'd add a little bit on that next breakout if you were hoping it would continue to go even more. Or it can just be a point where you initiate a new position. But we want to be aware once the price starts to get away from these bases. We usually have several breakouts, and then most of these trades start to fail at that point. So here would be what I'd consider kind of like major breakout number one. This is our first cup and handle coming into these major highs here. Then we had one breakout, another breakout here, so that'd be like a potential second entry or an alternate entry. We're forming another one here. If it breaks out, that'd be our third. And you may get a few of those before the trend eventually dies and you end up with one of these much bigger corrections. So those are the patterns we'll be looking for. We're going to mostly focus on the cup and handle since I have the cup and handle video out. Hopefully lots of you have seen that. There's also a cup and handle article on TradeThatSwing.com, which includes the video. So let's get to the scanning. What are we actually looking for? So on this, I've just done an uptrend scan. This is basically just stocks in really strong uptrends that are strong relative to the S&P 500. So we can see the S&P 500 has basically moved up 40% off its lows in March. This was due to the coronavirus fears. And 40%, in about 3 months, 4 months, 1, 2, 3, 4 months. And we're also a little bit below the prior high, so about 5% below the prior high. So those are kind of things we can keep in mind as we're looking through these stocks. We want stocks that are performing better than the S&P. Either we want them to have moved up more over the last 4 months, or we want them above this prior high. Either of those helps show us that, or both, show us that the stock's stronger. So I've chosen price versus 52-week high greater than 90%. This means the stock is within 10% of whatever high it's made in the last 52 weeks. This can be tweaked a little bit. You could put it a little bit higher, a little bit lower. But right now, because the market's strong, I'm saying I want to trade stocks within 10% of their high. Even the S&P is within 5% of its high. I leave it at 10 though. Let's say because a stock could have done this, gone way up, way above its high, and then had a 10% pullback. So it's still stronger than the S&P 500 because it's maybe had a much bigger rally here. It's also moved above this high, but because it's a bit more volatile, it's pulled back 10%, whereas the S&P is only 5% below its high. It's pulled back 10% off its high, the stock, whereas the S&P is now only 5% off its high. So even though it may seem like, the stock's pulled back a little bit more, in the overall context, it's moved up a lot more. That's the kind of stock I'm looking for, and also moved above its highs. So either of those things, as I mentioned, we can look for. Last close greater than $1, 10% above its 100. Greater than 110% means it's at least 10% above its 200-day moving average, because 100% of the 200-day moving average would mean it's right on its 200-day moving average. So we want to find stocks that are well above their 200-day moving average. And then these are just some comparisons to their industry, to the S&P. And this one, greater than 150 off the 52-week low, means it's moved at least 50% off the low. If it was 100, that would mean it's sitting right at its low. we're at 150, so 50% off the low. That just will show us stocks that at least have had a nice move off their bottom. These 5-day return. This is one I've added in recently just to help filter it down, because I think if I take that out, we're at about 160 or something like that. And so -5, let's maybe do -6 plus 6. So this is kind of saying it's moving within about a 12% range the last few days. So that's a consolidation type behavior where the range is limited to not moving down more than 6% or up more than 6%. We can see it doesn't filter out a lot. About 70% or about 70% of stocks pass, but it's still, as you can see, we went from 80 to 90 just by bumping that a percent up. So this is the basic scan for uptrends. It can be used for potentially multiple patterns, but I use it to just hammer through and look for these patterns. So you can sort, if you're limited on time, you can maybe go 3-month return. This is going to show you the stocks that are strongest over the last 3 months. You could also sort by yearly. These are the stocks that are strongest over the last year. As you can see, also pretty strong performances over the last 3 months as well. And then I just start scanning through the list for patterns. We want to see that cup and handle, contracting handle. So the handle is either in one of the 3 positions where we have a below the handle, at the handle, or above the handle. And I know one that's been on our watch list. This is what I call a technical turnaround. It was in a downtrend, but we have this cup and handle coming into this point here. We have a little shakeout here, moves into a tight consolidation, breaks out. So this would be an at the cup because the handle's forming right at the top of the cup. And then we also have this bigger cup and handle going on, which is playing out right now, where we have these consolidations occurring right at this prior high. So we had the first breakout right there, consolidating again. If we have a breakout, that would still be a valid trade. So the scan, this would be one, maybe you jot it down on your notepad or write it in your Excel spreadsheet, however you want to track the stocks you're interested in. I write them down in a notepad by my desk. And then you'd go through and do your actual due diligence. So at this scanning process, all we're doing is ones that are of interest. So I usually go through this really quick and just plow through. So is that of interest? That's a possible continuation pattern. If we got a consolidation here and then a breakout, that would reduce our risk. I wouldn't want to have a entry up here and a stop loss way down here, but if we get a consolidation, then maybe I can buy it here and have a stop loss just below the consolidation, much lower risk, maybe only $3 risk. That means I can get out near 100 for a 3-to-1 reward to risk ratio, risking maybe 5%, getting out for a 15% gain. Again, another potential continuation pattern. There was a cup and handle there. We could see a very nice one, in fact, because we had a couple swings where we start to see that squeezing action. The swings are getting a bit smaller until eventually it gets compressed right near the high of the handle in that consolidation. Nice pop to the upside. So the frustrating thing is about scanning is that you'll often find ones you should have been in last week or a few days ago, yesterday even. But so we're just trying to find those ones that are consolidating right now. GSX, potential continuation pattern. I want to show something on GSX because in the cup and handle video, I talked about using, looking for price action that hasn't gotten too wonky compared to the past. So if we look at this, we want to look for tight patterns, right? So we see this looks nice and tight. In percentage terms, it's about 10%. Here, this one also about 10%. And then we get up here and it starts to look very loose, which is not a good sign. But if we switch to log, all of a sudden it really tightens up, because in percentage terms, compared to these other moves, it's probably not that much different. If this starts to consolidate here, we still have about a 10% consolidation, just like all these other ones before these moves. So when we have really big price moves, just check out the log version of the chart to keep the whole thing in context a bit more. That way each move, a 50% move down here, looks the same as a 50% move up here. Just a little tidbit thrown in there. And then going through these 80 stocks, my guess would be maybe 10 will make it to a potential watch list, maybe even less. Especially for the cup and handle. If you add in some of the continuation patterns, you may get a bit more. But cup and handles, potentially one there. There was one down here again. Yes, continuation pattern up here. So then the process as you go through this, as you're looking through these stocks, is to write down the ones you like. Then you pull them up on your main chart. You look at the risk-reward ratio. How much do you think it could go up versus how much you need to give the stop loss. Typically we're waiting for that consolidation. Cup and handle here. Especially right this consolidation here. And then we have another potential continuation pattern here. A little bit different, kind of a technical turnaround, but we have lots of prior highs above it. So I'd probably leave that one alone. And usually I've been finding quite a few lately, so at the top of the list especially. Contraction right into a consolidation there. This one a little bit harder to catch because you had the gap up. But if your order had been sitting just above this consolidation, it may have got filled on that little pullback there. And we just see loads of ones that have broken out and just continued to run to the upside. That's why so many of these now are what we call the continuation patterns there. Cup and handle. Nice contraction. Another handle forming up here. If we get that consolidation here, another potential continuation pattern to the upside. This one also kind of aligns with these prior highs here. If we look at a longer term, you can see overall downtrend, but this handle forming right near these prior highs. So another potential one. So these would be ones you'd maybe write down, and then just you'd compare them to each other, pick the best ones you like. Out of, if I have 10 stocks on a watch list for a given night, I may end up taking one. Sometimes I won't even take any. Once you know what these patterns look like, you know what they're capable of, you know what a good risk-reward ratio looks like, you know what the market conditions are like. Even if you have one that you think maybe you can get 5 to 1 on or something, if you know that lately you've been getting lots of 7 to 1s, just because the price is moving so much, then you may want to hold off and wait for one of those better opportunities. I typically only take about 5 or 6 swing trades at a time, and I allocate all my capital to those trades. So I want to be very selective. Even though I'm coming up with maybe 20, 30 stocks on my watch list a night, going through these various scans, that all gets narrowed down to only having 5 or 6 positions at a time. And you do that just by looking at the ones, comparing them to each other, and also comparing them to what kind of trades you know are available or what you see. Because maybe when you're starting out, you're not catching these really good ones that are moving 30, 40, 50% in a couple days. But you see that they're there, and so maybe you want to hold off and being able to catch one of those. Because if you're in something crappy that's not really moving well, you take a pattern that's kind of like, is this one? I don't know. And it doesn't really match the criteria I've laid out in the Cup and Handle article, then yeah, you're just going to be stuck in those not so great trades, which sometimes happens to all of us. I have some trades that just don't go as expected, even though they looked really good. and that's going to happen. But we want to avoid as much as possible just taking trades because we want to get into a trade. You really want to think, what's available out there? I'm going to wait for one of those like really ones that's moving great and has a really nice pattern. So it's all just a comparison. You're going to narrow these down, write them down. So that's the process, just going through, writing the ones down that look good, and then you're going to go through here and add in your reward to risk. This was not one. Is a potential continuation pattern. There was a little breakout here, potential continuation pattern here. But yeah, then you'd have to look reward to risk. You want to look at how far the price has run on prior moves to estimate how far the price could run on a potential breakout. Then you can set your risk reward. So I use TradingView because I like that little tool for the risk reward. Shows you how much the price needs to move in order to get that ratio above 3-to-1. So let's move to the chart mill. Technical breakouts, momentum squeeze plays. These both have produced some pretty good stocks. You can see lots of love for these two scanners. So let's do technical breakouts first. I have a few additional criteria. So it's going to load a bunch of criteria in there preloaded, and then I'm going to add in a few of my own. So I have some settings saved here, and you can see all these things that it's added over here compared to when it was just the basic filter. And almost right away, you can see some interesting ones here. So, target forming a handle just below its prior high. Pegs forming near this high. Technical turnaround play coming out of a downtrend. Trimble coming up to these prior highs. Also, if you want bigger charts, you can go one per line and big charts, and then it makes them nice and easy to see. You can also see whether volume's contracting for an actual consolidation. So that would be one you'd want to write down. Again, not saying it's a trade yet. You'd have to go through the process of looking through the cup and handle and deciding, do I want to trade this or not? Cup and handle criteria from the article. Same with this one. Definitely one you'd want to write down, but then you compare it to the others, see which ones are worth trading, see which ones fit the criteria the best. This one, interesting, had a little triangle consolidate or contraction here. Then we had a consolidation breakout, and now we are consolidating again, so a potential another entry. Potential, again, not saying it is. You'd have to go through the criteria. So this is the process of scanning, where you are simply looking for stocks that at first glance meet the criteria. Then the real work comes in throwing it on your chart and deciding if target meets your criteria for a trade. We're up a lot more than the S&P 500. We're a little bit more off the high, well, about the same as the S&P, about 4% off the highs. This was the low that we measured on the S&P 500. So we're about 35%. So is this really a high momentum stock? The S&P, you can always do this. Going off that low, the S&P has been outperforming. So Target's actually underperforming the average stock, or like these big companies, 500 biggest companies. It's underperforming them. So it's kind of under a little less than average. So is that one you want to trade? I leave that up to you. I tend to prefer ones that are stronger. And that's the process. Sometimes when you scan, you'll end up, like I said, with loads each night. Other times you may end up with 10, 5, 2, one, it doesn't really matter. You're comparing it to the ones you end up with as well as what you know is out there. If you know that there's been these big cup and handles that have been running 30, 40, 50% within a few weeks after getting in, why are you going to take one that's only going to run maybe 10%, or it doesn't really have a lot of momentum behind it, or just isn't really looking good? Then as conditions change, maybe the market's not quite as strong, then that one that's moving up 15% kind of on average, or moving a little bit stronger than the S&P, that's the one maybe you end up taking, because there are no really strong ones anymore. So then it's always just a comparison, what's out there, what's available, and you want to try to avoid the FOMO, fear of missing out, as much as possible, because FOMO is going to get you into a lot of bad trades at bad prices. So I can't remember how many were on this list, about 165. You could potentially filter it down some more. I'll show you what I have used to filter it down. Relative strength, I think if we put this down to 0, it goes up to 287. So we could just look for stocks that are really strong, bump these up a little bit more, see that number starting to drop. Indicators, trend, maybe a technical rating. These are their own proprietary ones, but those are already set in there. Trend intensity, we could keep bumping this up. Still at 96 though. And that's the problem in a strong market, when you have the S&P 500, this red line, just in a very strong uptrend, you're going to have a lot of stocks on any scan list that's looking for strong stocks. That's just the nature of the market, so it's going to take a little bit more work. The nice side, the good thing is that you have lots of trading opportunities. The bad side is you're typically going to have lots of stocks to scan through, but you're going to like that problem compared to when the market's not so good. Maybe it's moving sideways, it's a little choppy. All of a sudden this list drops down to 5, 6, 10 stocks, and you are potentially sitting in cash a lot of the time just waiting for those trades, and you wish you had the problem of having too many stocks to trade. So those are 2 scanners. I'll just quickly go through these others. Nothing there. Main chart, I have these set to 2 years. So that's how I got these big. When you just load the default, I think it's typically about 6 months, and they're a little bit smaller. So I set it to 2 years, candles daily, and then also charts per line, 1 big charts if you want big charts like this. I like it set. You can kind of get a good idea of if it's a really good setup, because you'll be able to see the price contracting, the consolidations, as well as we're also watching volume, remember? So you can see that quite clearly on these charts. So I've been using Stock Rover for a long time. I'm going to continue to use them. I do like it. But Chartmill, by adding in those trade ideas and some of these criteria, really adding some good stuff, I think it can shave off some of your scan time, because just pulling up these trade ideas, I was quickly able to see some good trade ideas based on their predetermined scans, and adding in a few of my own things. So I hope that helps you out in doing your scanning. One final word, if you're short on time, you can always just look through, if there's 200 stocks or 100 stocks, just look through the top 50, or sort by performance and go through like the first page results, or the first 20 or 30, and just use that. That's all the time frame you have. So if that becomes your process, then at least you know that you're always looking at the top performers, or however you decide to narrow it down. Just that's your process. Then you're comparing those same stocks over and over again. You'll know what those kind of stocks are doing, what the stocks at the top of the list, those high performers, are doing, what kind of trade setups they're producing. So just be consistent with the approach, but you can always do that. Just manually filter it down yourself. Just say I have 90 results here. I'm going to sort by performance, and that's very easy to do on Stock Rover. And so I'm always just going to look at the top 30 results by 1 year performance, or maybe sort by 52-week range, and I'm going to look at the top 30 stocks by using this one. I do like this one because it shows stocks that are right. You can see where it is relative to the 52-week range. So Roland's right at its 52-week high. Fresh Pet, right at its 52-week high, making a new one right now. So another way to sort, and then, if you don't have time to go through all this, there's no reason to go. You don't have to go through all of them. Don't kill yourself. Set a time limit. Say, okay, I'm going to do 10 minutes of just this, pumping through the list, finding the patterns, and then 10 minutes of comparing them, sorting them out, and deciding which one I'm going to trade. And then you have like 5 minutes of putting out your trades if you decide to put out your stop limit orders. Buy stop limit orders above these, whatever consolidations you decide to start trading. So that's how I scan. Hopefully that helps you out, gives you a couple tools that you can use. And until next time, happy trading.